Charis here to give you the TLDR of what has happened in the last month in crypto. And gosh, it's nice to have some good news. Despite the global market conditions, crypto assets have continued to amass new highs as Bitcoin sees its best month since October 2021. On-chain data shows that the rally has been fueled by historic spot demand and a sequence of short squeezes. The recent rally brought many market participants back into the market, with BTC gaining 35% over the past month. Shifting to Ethereum, according to data from EtherScan, the total number of ETH transferred daily on the network surpassed 1 million once again, indicating that the network activity has not significantly declined over the past 3 months. In other good news, Ethereum core developers announced the successful launch of a shadow fork that will test the Shanghai Upgrade on a version of the mainnet. The Shanghai Upgrade has been widely anticipated because it will finally bring functionality for the staked ETH withdrawals from the Beacon chain. The final version is expected to go live on the Ethereum mainnet this March, allowing validators to withdraw the 26 billion in the deposit contracts. ETH is up 29% for the month. Shifting to the macro markets, in the long term, fundamentals matter. In the near term, it's mostly about sentiment and liquidity. Liquidity indicators in the US and Australia continue to suggest downward pressure on the markets as the RBA and the Fed still try to tackle inflation. In saying this, the Fed is slowing down their rate of cash rate increases with only 25 bips increase this month and the RBA increasing by 25 bips as well. Equity and crypto markets move positively with the announcement. Other positive market signs are the reduction in the US inflation rate in December coming down at 6.5% from the previous 7.1%. Some investors are stating that we've hit capitulation, marking the end of the decline of the markets. But remember, the US business cycle continues to show economic deceleration in most areas, coupled with a sticky labour market, which generally tends to be a lagging indicator. In addition, the yield curve continues to get even more inverted, suggesting a likelihood of a recession. I know I've said this many times, but there are a lot of mixed messages in the market right now, so please be careful when investing. Jumping to NFTs, there are rumours that Amazon is launching an NFT initiative in the spring, which could include customers playing crypto games to claim free NFTs. While Amazon's specific crypto ambitions are unclear, the tech giant has the potential to make huge waves in the space. The English Premier League announced a 4-year licensing partnership with SoRare, a French startup. The cooperative will let fans buy and sell digital collectibles for one of the world's most watched sporting leagues. Porsche launched their 7,500 NFT collection in January. The piece is minted for 0.911 ETH, a reference to the Porsche 911, which just happens to be one of my dream cars. The floor is steady at 2 ETH. And Proof Collective CEO and Moonbirds creator Kevin Rose fell prey to a phishing attack that drained his wallet for 684 ETH worth of NFTs. That's gotta hurt. In the DeFi world, a proposed launch of Uniswap's version 3 on the BNB Smart Chain was approved by the community in January. The team estimates that the bridge to the BNB Chain will create a better liquidity source with less trade slippage. And finally, sometimes it pays to be invested in crypto. Last week, the New York Stock Exchange slept in and forgot to open auction for a number of stocks, which sent prices plummeting, all down because of a little computer glitch. And that's a wrap for January. Follow us on socials to stay up to date with all things crypto. And remember, please be safe and do your own research.